The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, joined this morning by our man Basil Chapman, filling in for Tom. Basil, good morning.
Good morning to you.
I think we're going to have a few things to talk about this morning in the markets, Basil. To start things off, yes. Man, the losses extend, folks. We just got an ISM non-manufacturing number at 10 a.m. for that update. And, man, talk about a continued acceleration to the downside. You now have the S&Ps down 30 points just in the last 7 minutes. We're looking at a Dow negative 265, trading at 25,813. S&Ps off about 26, trading at 2861. NASDAQ negative by 70 points, trading at 77.15. Man, why don't we jump to the VIX to start things off, because quite a spike, and we haven't even seen it reflected. This may be a delayed feed because that does not make sense, and it is. We're looking at 15-minute delayed. You're going to see that VIX spike when we hit the 10 o'clock on that price tag. I'm going to jump through some of the charts real quick, Basil, just to bring people in, because, boy, it is remarkable across the board. We'll start it off. Euro-US dollar. We're seeing some dollar weakness on very weak non-manufacturing ISM, and why not? I'll pull up that number because it is a big one. 52.6. The estimate was 55.3. Quite a number there. That's what just popped at 10. We got the euro back at almost 110. Gold contract now at 15.24. Pretty remarkable, Basil. Tuesday, we were trading in gold, I think, at 14.65. You're talking about almost $60 from that level. Crude oil plummeting. Remarkable that we may see a 50 handle. We're 5 pennies away, 3 pennies, 2 pennies. We'll get there in a moment. S&P 500 now at 28.55. That pain does not seem to be stopping, as fear is everywhere in the market right now for the indices. NASDAQ 100, my goodness, from 75.80, now more than 100 points below that level at 74.76. And the Dow 30 was above 26,000 when we got that number. We're now sitting at 25,715. And Basil, even in the 3 minutes that I have between the update, which ends at 10:03, to the program that starts at 10:06, I'm texting some friends, and they're talking about the number as well. They're in the market. And I said, man, from Tuesday morning, right, we're now down 1,300 Dow points in 72 hours. We're now down 150 almost S&P points in 72 hours, let alone the NASDAQ. Pretty remarkable.
It absolutely is. And not only that, when you get this kind of speed with the momentum to the downside, and this morning, we at the close yesterday, we were just above the 200-period moving average in the Dow daily chart. We had last been there in August, and all of a sudden, in 3 sessions, you go from Dow 27,100s to the low today of 25 so far, 25,743. That is momentum to the downside. So it's really important to find some stability on the weekly uptrending. There's a trend line. We're right at it right at this moment.
That's interesting for sure. Pretty remarkable that we could actually still be in a trend when you drop 1,300 Dow points in 72 hours, right?
Well, you know, this is, when you look at the monthly chart on the right here, you can see this is the monthly. So daily on the left, middle is the weekly chart. You can see this trend line that we're hitting right now. The MACD's negative, stochastic's gone from 80%, now it's down to 73%, so it's weakening. But the monthly chart is still holding the 14-period moving average. Periodically, since the December low, we've been below that 14-period. The black line made it nice and thick so everybody can see it. So this is a very important moment. But my biggest concern, and one of the reasons why for subscribers to my opening call, we had gone short about 120 points off the all-time high, is because the way my Dow Quartet Index is really an index I've had it for years and years. It used to be GE, IBM, MMM, and UTX. Once GE got bounced, we replaced it with Caterpillar. These industrials, these are heavy, well, IBM perhaps not, but the other three are really heavy industrials. they did very nicely in terms of a bounce, but that's all they could do.
Okay.
And now they're breaking to the downside. To me, that's not a good sign. It's had me kind of worried that this particular decline, we're going to see how it holds the 14-period moving averages, because the one in June went under it and then closed very sharply above it in the candle of July. This is a really important moment. No bounce yesterday after that big move down, and a little attempt this morning, and now we've really doubled down. Whew. I don't like this action at all.
And it's, I mean, talk about pressure on the non-farm payrolls tomorrow morning, because man, oh man, if there's ever a miss on that number, watch out, folks. On Friday, coming into a weekend, on the heels of, let alone, if we just come in line, Basil, it may not be enough. You know what I mean? I mean, that's just a continuation of basically what we're seeing across the board in the market. You know, you better listen to this market, folks, because this move, it's almost difficult to overstate how fast things have moved in 72 hours when you talk about 1,300 Dow points.
Well, do we have a moment here? I just wanted to show something. Okay. So here's a chart that I'm showing. I've shown it quite a number of times on my show, the Tiger Technicians Hour, at noon every day. And what it said was, I'm using two moving averages, the 9-period exponential moving average. You can use any ones you want. These are the ones that I've always favored for my Chapman wave methodology. The green is, it's green on the way up when it crosses above the 14-period, the black line.
Okay.
And when it crosses under it, it goes pink. And what I said is back in April, when I got a sell signal, I talked about you have to have bad news as what I call it bad news cloud cover. In other words, it's got to be something that isn't a one-off. It's got to be something that is repeated daily and then weekly to be able to sustain a move to the downside. You spoke about the volatility index at 21 right now.
Yes.
To be able to sustain and go into the 20s, usually you go into the 20s and then you're overbought in the VIX and you oversold in the market. So the speed, and you're correct about tomorrow's indication, because if there's really bad news, market acts badly tomorrow, we can go into a Monday, a really ugly Monday. So let's just do one thing at a time. We've got the moving averages. Once I got that sell signal, it happened to be a peak D in the Chapman wave, the fourth highest wave. That's where we always say other things can happen. And it took 10 sessions before the 9-period crossed underneath the 14-period moving average. And then look at we talk about today, but look, there were very sharp moves to the downside, except here you had rally attempts. Even the lows were lower lows, and it took right up until the 13th of May to get to 25,222 for a bounce, and then it continued down again. So if we go to the high that was made with a little tiny doji candle right here on the 16th of July, 27,398 was the high.
Okay.
We were fortunate we were able to short 7 points from the top. Same thing, bad news cloud cover, but it took 12 sessions before you got that red, ugly candle, and it crossed negative. You can see pink, it changed to pink.
That was the start of that August run.
But you can see there was one ugly, the gap down the next day, and then another gap down the following day. So this is kind of where we are. So now let's go to this one. Bad news cloud cover. We make the recovery high at 29,306, 27,306. And it took a whole bunch of time before it crossed negative. And on the 14th session 3 days ago, that's where it is. So the pattern itself so far matches, not the candles, these are really ugly red, but the pattern's the same. So now, when we get back, we can talk about what we need to look for to sustain some kind of a bounce and turn the corner here.
Perfect. We'll be right back, folks. Stay tuned.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien joined by Basil Chapman this morning. We got markets hanging around lower territory. Dow off about 280 points right now. NASDAQ negative by 63. S&P is negative by about 25 on that non-manufacturing ISM number, coming out weak at 10 a.m. And Basil, if you could continue jumping through what you were talking about with the Dow.
So I wanted to just emphasize that although headline news, because of the terrible closes for the last, well, we don't know what the close is today, but up until this moment, we've had big triple-digit down moves in the Dow for 3 sessions.
Yes.
When you look at the weekly chart, look at this, it's just one big red candle.
It sure is, man. So
to put it into perspective, yeah, it looks very ugly, but how we hold this support is going to be very important.
Definitely.
And a lot of damage was done in a very short period of time. I would not be surprised, I know Dave White does work on this, that if the put buying is just extraordinary at this point.
Oh, yeah.
And therefore, we could easily get an oversold condition.
Sure.
And let me just, sorry, you wanted to say?
I just said sure, right, as in I could see that. I mean, it's
right.
I mean, to drop 1,300 points, you could see a little bit of relief bounce. It could be nothing but a little exhaustion on the way down.
Correct. So is the relief bounce going to be like what we saw somewhere over here, May the 13th, a nice bounce back to the 14-period exponential moving average? How we bounce is going to be really important. The other thing is, if you put it into context, the concern, at least from the way I'm looking at it, is that the XLF, which is the financials, and it's holding the XLF trading down just 28 cents right now, 26.56. Has had a pretty big move, but if you put into the context of this rising, we can call it a rising up channel, is about to test at, I'll give it a little room, let's just say 26, let's call it 26. If the XLF is able to hold the 26s, have a pretty good bounce, but it can't just be a bounce of half a point. It's got to be a bounce of about $1.25, and then come back and retest and use time. And this is what I always like to talk about, is that in the market, you've got time or you've got price, and sometimes you've got both. And in this particular instance, I'll just show this. If you've got a moment, I'll do this. I'll drag this across. In the Chapman wave methodology, we like to identify the lowest, most obvious low bar, and then basically grade each higher high. So the first peak will be peak A. If it doesn't pull back underneath the starting point and goes a penny higher than A, it starts leg B, then it becomes B. So you go up to A, B, C, D, E, F, G. It's like on the piano, you only got those 4 letters. I'm sorry, you got the 7 letters. But what's really important, at that 4th highest peak, other things can happen. I always look at patterns of just 3 straight up, straight down, straight up, or an arch. I made it red because if you take out the left side low, that's very negative, or a cup. If you take out the left side high, that's it could be very positive, or you've got the combination of the 3, straight line and an arch. If you take out the left side low, very often you go lower, and the cup. So if I keep it as simple as that, look what we've got. We've got in the Dow, let me just go to the Dow for a second because this is the one that illustrates the best of all. You made your peak D back on the 16th of July, 27,398. You came all the way down to 25,339. Look at the nice cup formation. Failed to make a new high. That's the green cup formation, but it failed to break out. It went to 27,306. And it comes down from the 12th of September, and here we are. So now you're forming the arch formation, and that makes that whole 25,339 area absolutely key to hold.
Yeah.
So I just want you to put things in perspective. It sounds horrible right now, but actually it's what, a 2-3% correction.
Yeah.
So far, it's an eye blink when you're looking at the huge move in the Dow going back a few years, but it doesn't feel that way.
No, it's a great point, Basil. I was actually getting ready almost to make a similar point just in terms of context, right? Context is always important, folks, in life and everything. And I just pulled it up as you have. The monthly is remarkable, Basil. You pull up the monthly. You go back to even, 2002. We had up until 2008. You just look at it from 2008. I mean, there's no pullback relatively. And now even more, I would say ridiculous, even more remarkable probably is the right word, is that, yeah, this bar is quite a bar that we're looking at. Now, this is a monthly chart on the Dow. We just went from about 27,040. We're now trading at 25,830. So you're talking about almost 1,200 Dow points, okay? Now, you just go back to May, and we had a monthly bar that was almost 2,000 points to the downside. And then, of course, you back it up to December and the collapse in the market. And we had a big one. 4,500 Dow points in a month, folks. So, yeah, I wouldn't be worried if you had a 1,200-point pullback, Basil, right? But the real worry is that, does this extend? I mean, we're in October 3rd right now, and already this monthly bar is making a presence on these charts. And man, oh man, I mean, this is not how you should. I mean, I almost had to do a double take myself, Basil, when I said, wait a second, the Dow is at 6,400 in 2008. I said, is that right? Is that right? It sure is. I mean, and we just hit 27,000. You don't have to be a market scholar to understand that there's usually pullbacks of greater magnitude over the course of a 10-year bull market run, and that is what I tend to try and keep on the horizon when you try and say, my goodness, but really keep in context of, if we see a pullback, you could see a low, of even 22,000, even 23,000, just kind of where these bars closed at when you're looking at December and January.
And it's something you could expect. Now, what's really interesting is, let me just show this on the S&P. I thought I'd put this, since I know nobody likes to talk politics, but I like to talk about the politics of the market. Look, this is the Obama rally. You're going all the way back. That was an incredible rally, and President Obama was the one who never spoke about it. It was like he was embarrassed to talk about the stock market. And look at the spectacular move. So Trump comes along, and that was in 16 right there.
Yep.
So he has had a very good move, but he's also had a very big consolidation. And this kind of corresponds to the whole, first of all, there was the Mueller investigation. Now we've got the impeachment investigation. And when you think about what's really going on, I could look at this chart. I would have no clue that there was something like that going on politically, because normally when you get talk of impeachment or you get anything, you would see this market way lower.
And especially when you have, not to interrupt, but you have an election coming up now, 13 months in the forefront, and it looks like no matter who the Democratic candidate's going to be, there is going to be a vast difference between Trump and the Democratic candidate. And if some of those, corporate tax cuts get rolled back, you're going to see a market reaction for sure. Whatever you think of the, politics of it, you better be aware, folks. Now, my take is that, the market being up is not necessarily indicative of a healthy, prospering society. So take that for what it's worth. But just like you're saying, the consolidation, Basil, the one thing else that I looked at this Dow, we're now back to where we were trading at the beginning of 2018, which is 2 years of nothing in the market. You better be listening, folks, because that is quite a consolidation. And, as Tom would say, you're going to break it up, you're going to break it down. 2 years of just kind of hanging out here. And, man, I see a tough case to say that it's going to break very higher positively with everything that's coming down the line.
So that means I need to talk to you about this consolidation in 2015.
Perfect. Folks, Basil and I are going to be back in 3 minutes. We got the Dow off 258, S&P's negative by 23. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien joined by Basil Chapman this morning. We got markets We're getting a little bit of a pop, Basil. We got the S&Ps now down just 9, Dow Jones negative by about 133 points, and NASDAQ negative by just 27 right now.
So that's one of those things where it was climactic in the sense that there was really a bad news interpretation, and then on reflection, the market says, well, maybe it's not that bad.
Right, and maybe we just went down 1,000 points in the last 2 days, so we don't need to tank it down another. But, folks, we're still only an hour into the trading day.
Yeah,
you got it, Basil. You got it, for sure.
So I just wanted to show you, from around about August of 2014, we went sideways. We did go up to, it was around about, I think it was 19, yeah, there it was, 19, around about 19, quarter about 1950 in the S&P, went up to 2134, down to 1810, and you're kind of back there in June of 2016. So
yes,
that was a sideways consolidation. The numbers now are bigger, but the percentages are close. They're not the same, because I think 2134 to 1810, that's 134. Yeah, so the percentages are slightly different, but the pattern isn't all that dissimilar. Now, what I wanted to just mention is to try to put it into context. If we think about this as, look, there's no other way to call it, but from the 2009 low, this has been a mega bull market, perhaps one of the longest mega bull markets, with just a 20, 22, 25% correction once or twice.
Remarkable. Agreed.
Not bad, right.
Yeah.
But at the same time, the point that I want you to make is, in my experience, this is probably the quietest mega bull market that has gone to all-time highs without any discussion in the general public. If I've asked, the thing I ask people is just if they start to actually really talk about the stock market, if they actually are, I say to them, does anybody come up to you and talk about the fantastic gains that they've made, or any stock a hot stock that has done well? And to a person, they say no. In fact, the only thing most people do is they kind of shrug their shoulders and say, what's happening in this market?
Yeah.
So I think historically, I don't recall whether it was the tulip bubble, I don't care where you go, the real estate bubble back in 2008, 2009. I remember being at the bank, at the ATM, and there were people standing around on their cell phones saying, yeah, I'm just waiting for my mortgage and all that. I hear nothing. To me, that is one of the biggest bullish signs. I know it's incredibly hard to believe, but I don't see how this market can make I'm talking about a major top. I'm talking about another one that's 50% corrections like we had. I just don't see how we can do that now without this proliferation of people. Without the euphoria,
right?
I mean, I remember playing tennis in an indoor club back in 2000 in the bubble, and you could see that they put stock tickers so that you could. I remember a barber shop had his TV on the CNBC. There's nothing like it now. So I know it's an esoteric thing, but it just seems to me you do not make major tops without everyone in the world, not just the United States, talking about those fantastic, whatever it is.
No, it's a great point, because I think about that. I like bringing the fundamental aspect of things into the equation for sure. And the only thing that I wonder myself, Basil, right, is that maybe things have been so good for so long, going back to this Dow chart, that the exuberance has even tired out, right? That you know, you can only be so exuberant from 6,400 in the Dow to running up to a high at the beginning of 2018 to call it 26,684. So you go up 20,000 Dow points over the course of about 10 years. And the scary thing is that now we've just had a giant 2-year consolidation. So that's where I just kind of present the devil's advocate, you know.
I think that's important, but at the same time, look where the VIX is. Historically, the VIX has been major turnarounds, 36.20. That was back in December of 2018. 50.30, higher yields. It's the same story no matter where I go. China,
we haven't seen that spike yet. I agree. Not for the last 72 hours. I mean, I anticipated, Basil, the VIX when it caught up, which it did now, that would be above 21 on that ISM, on the 10 a.m. news number, and you haven't seen the acceleration, not even in the market, like we said, catching a little bit of a bounce now. Now you get the Dow down maybe 190, but I agree that the volatility is not priced in with where you might think it would be priced in if fear was really rampant.
So both of us are trying to put it into some kind of perspective. It doesn't matter which bias anyone has, just to try to put it into a technical aspect.
Yes.
And then on a purely emotional basis, 89.53 was the bank crisis of 2000. I don't know if I've got it here, but the VIX index was at 170 or something like that back in the crash of 1987.
Okay.
So yes, maybe in a sense we're getting a little tired of these climactic moves to the upside. You can see they're getting a little closer and closer, each one of these big spikes. So that kind of wears one out.
Yeah.
But at the same time, just on a purely technical basis, the concern here for me is, let's just see how, for instance, the XLF, which is the financials, trading right. Where did I put that? What did I just do? Uh-oh. That was a mistake. I wonder how I did that. I've got it on the left side. All right, I'm not going to be able to do it right now.
Okay.
I'm going to make it. I'll do it XLF. Let's see if I can get it this way.
And I can pull it up, Basil, if you'd like.
I've got it right here. Oh, okay. I haven't got it right here. All right. So what we're looking at here is in the XLF, having pulled back, I always like to look at it as if the XLF is, in a sense, an international thing.
Okay.
That we're looking at the financials. Now, the financials have been hit somewhat because of the fact that we've got the brokerage fees have dissipated. They're practically nothing now.
Yeah.
So they're
not
going to
practically,
rethink.
actually nothing, right? Pretty remarkable. That's their business plan, is charging $0 for commissions, but that's the race to zero, and they're going to have to make money in other avenues, and that's probably going to cut into their margins, folks. That's what they're talking about.
Right. So if you put it into that aspect, that's just another thing for the bank, for the banks to worry about, the financials, let's say, not just the banks, but the financials. Yes. But at the same time, they're still holding pretty darn well. They should be way lower.
I agree. I got the chart up here, even just looking at a daily. I mean, that collapse in December of 18 brought the XLF all the way back to 2205. We're sitting there at 2648 right now, and that's right where we were, Basil, at the beginning of September. So, I mean,
they are, yeah. And there's a trend line you can see in the weekly chart right here. There's a trend line that takes you to 26.20. Let's call it 26, as if the XLF breaks under 26. Then that monthly chart is starting to make that arch pattern that I was looking at before. So I don't think we're out of the woods for this particular move to the downside, but I just wanted to put into perspective that it feels horrible. But actually, we've seen this before.
It could be a lot worse. I mean, it really could. That's what I try and keep on my horizon. I say we're down 1,300 Dow points in 72 hours, but that's a blip. We were just at all-time highs, practically.
Correct.
Right up at that level. So we'll see. Folks, come on back. We're going to talk a little. We got earnings coming in, Pepsi, Tesla. We got a lot of action. Battles and I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We got markets getting a little bit of a bounce off the lows we made just after 10 a.m. We got the S&Ps negative by about 8, NASDAQ negative by 22, Dow negative by 109. I'm just going to jump through some of the charts real quick, Basil. I was taking a look at them in the break, and it's pretty remarkable how we clawed back. I mean, there's the S&P. We're sitting at 2890. You spiked to below 2860. We're now a solid 20 S&P points into the bounce. NASDAQ 100, quite an acceleration from 7580 down to a low of 74.76. Now you're talking about how many points? 24.68, almost 70 points bounce in the NASDAQ 100, and the Dow trading from almost 25,700, now 200 points off the low for the day. And gold, as you'd expect, pulling back, but gold still holding pretty steady, 15.17 in the price of gold, and the euro at 109.80.
What do you have the current price of the dollar at?
You know, I don't have that one up in front of me, Basil. I just happen to have the euro US dollar. But prior to that number, you traded from 109.62 up to a spike of 109.95, and we've basically pulled back half of that insta move that we got at 10 a.m. So jumping around to some of the stories out there, Pepsi coming in with some serious growth as they show that they have grown 4.3% during the quarter. Man, they're selling a lot of items, folks. $1.56 for their earnings, $17.19 billion in revenue. Decent beat, man. When you talk about 16.93, you're talking about $260 million above where they expected to take in. We'll jump over to that chart in a moment. On the flip side, Bed Bath & Beyond. I saw this is the 10th consecutive quarter, Basil, that Bed Bath & Beyond has lost revenue. I mean, a tough business plan. You're competing. You got big stores. You're selling items that Amazon really seems like they might be able to undercut, let alone. And Tesla as well, missing on their number. They were looking for maybe 100,000 vehicles. They come in at 97,000. Seems like this story just repeats itself with Elon, the man talking things up and not being able to quite deliver. Tesla down about 6% on the day, spiked to 224 to 228, jumping over to Bed Bath & Beyond. That number, and look at that, quite a pop. It was down at 920 pre-market, but man, oh man, that stock with some volatility actually up 0.5%. Not bad, Basil, when you can get a pop as you report the 10th consecutive quarter of declining revenue. And then Pepsi trading higher, 2.6% to the positive, trading at about 137.43. And we're really coming into a plethora of earnings starting really next week as we go into December. And that'll be interesting as we start to see those companies reporting and really where the forecast is going forward for the next fiscal year. Trade concerns, is that going to hit the economy? Non-farm payrolls tomorrow morning shaping this market. A lot going on for sure.
So Pepsi, this is very interesting. Indira, what was that? Indira, I can't remember her name. She was the head of Pepsi.
Their CEO, yes. I forget as well.
She was fantastic.
Yeah,
I mean, she changed the whole idea of just drinks, and she had all these different products, snacks, and etc. And you can see this chart. Actually, had it all notated. I'm not sure why it's not showing the notation. However, then you get a new CEO. Now, normally with a new CEO, it takes a little while, and the other CEO, especially if it's a successful company, very often hands it over at the top, like Wells Street with GE, and then there's a big problem. But this person has turned it around in terms of a very short period of digestion back in 2018, January, February, March, down through the April low, and now we're looking at all-time highs. That's admirable to be able to take an international company that has been reinvigorated some 8 years ago, maybe a little more, and then to be able to continue that. I'm impressed. I'm impressed in the chart pattern. It's looking very good. And this speaks to something I've spoken about on my show recently. I said, it's so interesting that in this particular time, you've got the defense, not defense Raytheon, etc., but the defensive stocks like a Coca-Cola, McDonald's, Pepsi, Procter & Gamble, doing so well. The XLP, I think it is. This is here you are almost at all-time highs. You were at all-time highs just about a few weeks ago, a month ago, in the indices, and the defensive stocks are doing so well. So this is the most topsy-turvy market in terms of tradition that we've seen in a long time. I love the fact that BBBY, which is Bed Bath & Beyond, I guess those 20% coupons that everybody forgets to take with, it just isn't working for them anymore. But
I mean, that chart, man, just looking at the monthly on the right, my goodness, and I guess that's
look at
where...
the monthly, but look at the weekly, the daily, because remember I spoke about the Chapman wave methodology. We like to get to a D, the fourth highest peak, where other things can happen. Look what happened. You stopped there at peak D, you made a cup formation, retested, just failed to make a new high above 11, and now you've pulled back into the cup. If BBBY trading at 10.06 up 0.04 starts to trade in the 9.20 area or so, then you could get your 1-to-1 to the downside. So this has to make a W formation here. The cup, left side cup, must hold the support. I'd even give it a little room, but it mustn't close underneath the low of $9.50. Okay. And if it can make a little bit of a rally, it's going to save the day, at least short term. But that weekly chart looks very ugly. And you're saying Tesla, and now this is going to be very important. Tesla has made this huge, remember the arch formation that we're looking at? Look at this huge formation. It goes from 178 in November of 2016 to 289, and that was in, I think it was June. Let me just double check. No, September of 2017. And now it's given all of that back, and it's making this cup formation. It's already gone underneath that low. Oh, no, it didn't. 178.19. 176.99. Yep, it's gone underneath. It's trying to rally. This is important because now is the first time you've got a lot of competition for the electric vehicles. They're going to lose the rebate that the government was giving.
Keeps going down. Yep.
And now you've got competition. BMW, Volvo, everybody's into it now. So I think this is where could you say, the rubber meets the road for Tesla.
Not to mention a plethora of debt that they have to pay off, man, as this comes to fruition.
It's a lot of things, but on the one hand, you've got to say, this is unbelievable that someone could come from nothing, not even in the business, produce an automobile company, and if you know the size of the warehouses, if you just to the infrastructure costs an unbelievable amount, and to be able to get it to such a successful level, because the Tesla was a state of the art.
Yes, they were ahead of their time, for sure.
Yeah, on one hand, you got to admire them. On the other hand, you got to say, as a business, I've always said they're probably losing 40,000 on each Tesla they sell based on the debt. But
no, it was all a promise of the future, right? You know, I mean, that's where, I mean, their growth story and the problem with that story is, as you talk about, that growth is going to be impeded by the number of companies with beautiful options. I mean, Tesla, there were electric vehicle options, but in many times they were very discount, right? They were very small. They weren't glamorous. And so Tesla.
They didn't have the sexiness of a Tesla.
Exactly. But guess what, man? They, as you know, Basil, they're coming down the line. And so when you can't even meet the production goals right now, I saw an analyst out there today saying for the first time, I have demand concerns. That hints at what you're talking about. There's going to be other options. Everybody doesn't need a Tesla. If they want their sleek electric vehicle, they're going to have many options. Folks, Basil and I are going to come right back. We'll finish up this program. Markets in negative territory. Stay with us. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Basil Chapman this morning. Basil, I just want to jump to bonds real quick because we hadn't touched on it. We got some serious moves since that 10 a.m. move. The 2-year Treasury yield, lowest level since September of 2017. That 2-year coming in at 1.38%, and the 10-year now back basically to 1.5. Pretty remarkable that in, I think it was it August or September, we go from 2% to 1.5. We jump back up to almost 1.8. We're now back at 1.5. I mean, these moves are almost unimaginable in the 10-year when you're moving 0.5%, 0.25% in the span of 2 weeks, 3 weeks. And it makes sense with the type of market action we get. We got the Fed trying to decide what they're going to do, the economy possibly weakening, but just remarkable the volatility that we're getting across the board right now.
It makes sense because as equities become, people get more nervous about stocks,
Definitely.
They tend to take some money out and they put it into the so-called safety of, I always say so-called safety of bonds, because you can tell when it came down, the bond, the TLT came down pretty sharply. So I say so-called because it's just a safe haven and they're just parking it there. That's my guess right now.
Yeah. Oh, definitely. Right. I mean,
if we see the TLT anywhere near 150 in the next, in October, that's where I would say be careful, because the market is probably going to go quite a bit lower. So this is going to, that's a kind of a benchmark for me.
And folks, check out the opening call. Basil does a great service right under newsletters. You can subscribe. He's got a number of great workshops that all his subscribers gain access to. He just did one in August, let alone the number that you get in there. And of course, the charts you're seeing, folks, I see them myself. I'm always checking out the opening call, what Basil puts out for subscribers. Great service, putting out charts and analysis every morning, let alone he's usually got a Saturday update out there, maybe even a Sunday update. So check it out as we come into that weekend. Non-farm payrolls tomorrow. Basil, I always appreciate you filling in for Tom Mann, and we look forward to the Tiger Technicians Hour at noon.
Thank you very much, Tommy.
Thank you,
Have a
Basil.
great day.
And you too. Folks, stay tuned. Fast Market coming up next. Basil back at noon. Steve Rhodes, Dave White, Tom O'Brien back at 3. Have a great Thursday, everybody.